Hey everybody, Chris Pulver here. Welcome back to another segment of the Pulver Report, where we trade to be profitable, not perfect. Today's video, I'm going to discuss the power of swing trading. It's a really simple concept, and all we're looking to do is trade on pullbacks or retracements. And then we look to book our profits beyond a previous high or low. So we're going after a swing trade where we're buying low and selling high. Oftentimes, swing traders are participating with the overall trend and looking to capture a reasonable chunk of profit. And then it's chunk after chunk after chunk participating with the trend with positive reward to risk ratios. Many of you have already checked out my day trading and scalping video. And number one, I really appreciate the feedback and comments. And number two, day trading and scalping techniques are very different than swing trading. When swing traders are logging these trades, it's not surprising that swing trading can become a very easy strategy, and in fact, a preferred strategy for so many traders. And I'll explain why in a little bit with the pros and cons. One common misunderstanding is that swing trading takes too long, all right? So for traders that are looking for quick profit, maybe price action, day trading, scalping might be a little bit better. But the way that I define swing trading is this. All we're trying to do is follow the prevailing trend and enter on retracements. We place stops where the trend is invalidated, and we place profit levels with a positive reward to risk ratio. All right, so let me illustrate this with some fancy magic finger animation. Okay, let's say that we're in a bullish trend. This could be a stock, this could be a currency pair in Forex, this might even be one of your favorite cryptocurrencies. Price action is the common denominator in this scenario, right? So if we're in a bullish trend, we're gonna see higher lows and higher highs, right? We are only interested in buying into those lows or buying into those dips, those pullbacks, those retracements. Those serve as price going on sale for us, where we can scoop up those shares or those pips and we can see price continue higher with the bullish trend until we are satisfied with that swing trade. So we are looking to enter on the dip and we are looking to take profit on the rally. And so if we have a low to high, we are buying and scooping up those retracements and we are taking profit when price makes new highs. And if you flip that around into a bearish trend, the market's price action will show us lower highs and lower lows. So we're going from high to low, lower highs, lower lows. So here's our swing. We have a high, a low, a lower high, a lower low. And our goal is we see our swing, identify our retracement levels and our pullbacks. We're selling into those lower highs and targeting lower lows, going after a positive reward to risk trade. Swing trading does not have to be complicated, all right? It is really common for swing traders to keep these swings really simple. All we're looking for is a 2-to-1 reward to risk. And then we look to stay active with the smaller time frames going in the same direction as the larger time frames trend. And for swing trading, I put my own personal spin on this. I'm typically looking for profits on larger time frames. You know, a lot of times in my analysis, I'm looking at daily and weekly charts and major highs and lows. So when I look to establish a swing trade, I'm aligning those highs and lows on higher time frames and then getting into the action and swings on the lower time frames. And if you're part of my Flex trading room or want to be part of my Flex trading room, as an example, we talk about these daily and weekly chart levels all the time. And we're looking for wide open spaces for price to travel. I'm always looking for major lows to buy, and I'm looking for major highs to sell. And then we can go down and we can utilize those swings. We can use Fibonacci retracements, we can use GANs, we can use percentages, pullback levels. If you're familiar with Fibonacci retracements and extensions, most of you might be, that's great. Look, it's pretty simple. The buy zone that I prefer is I'm looking for a 38%, 50%, and 618 retracement level. Okay, that gives me a pretty solid window to look at to see price react to the lows and highs that I'm looking to buy low and sell high. And once we can kind of confirm that price action is suggesting that the trend is starting up again, we are buying those windows. And again, that's buying into those retracements or selling into those retracements. And if you like those windows, like the 38% or the 50% or the 618%, you can keep it really simple and keep it really efficient. Look for the 50% retracements. Okay, that's the halfway point. That's the balance of the market. I really love using that 50% level in the Forex market and in cryptos. Okay? Maybe in stocks, we have trends that are so aggressive that a lot of times we get those shallow retracements like the 23% or the 38%, or in GAN retracements, I use the 30%, which again, I have that video in my Keep It Seriously Simple video series. So check that out. So for a little recap, we are always looking to trade support and resistance. Find that major support that you want to buy from. Find that major resistance that you want to sell from. And then we start looking for swing trading opportunities from the lows where we're expecting a bullish trend, or we're looking for swing trading opportunities from the highs where we expect a bearish trend. And between thousands of stocks, 28 majors and crosses in Forex, 10 to 20 high market cap cryptocurrencies, you can always find these instruments at really significant levels, or levels that we want to trade from. But in the event that you just want to trade your favorite instruments, okay, let's say you love trading the dollar yen, or you love trading Tesla, or you love trading Ethereum, and these prices have already reacted off of a high or off of a low. We've already seen price react to a major support level or reject a major resistance level. Well, that's when we can drill down to the lower time frames and see where it just came from. If the market just came off of major support, we're probably going from a support level back to a resistance level. So if we have established support and we are targeting resistance, let's look for swing opportunities along the way. And oftentimes you'll notice that price does test support resistance. In fact, it oftentimes will test it several times. But as long as that support holds, as long as that resistance holds, we are buying low, we're selling high, and we are taking swing trades. And each one of those swing trades that we can participate in, our goal is to go after a larger reward than risk. And if you'd like to know my little secret to riding the gravy train on these profits, it's set a lot of chart alarms, right? Set alerts. Because when you set your chart alarm at the stop area, you know it's time to get out of the trade. When you set your chart alarm at the take profit level, rather than closing the entire trade for profit. Granted, 2 to 1 is great, but wouldn't it be nice to squeeze out a little bit more? Wouldn't it be nice to see the market be generous and work in your favor where you can get a 2.5 to 1, 3 to 1, maybe even get luckier and grab this massive winning trade when all we have to do is let our profits run. So I utilize a lot of chart alarms on my software so I know where I'm wrong, I know where I'm right, and that way the setup is I like the trade, I take the trade, I follow my alerts, move my stop losses into trailing stop losses, and let profits run. So when I do this in stocks, I like to use a trailing percentage, a 10% if I want to be really tight, or a 20% trailing stop if I want to be a little bit more passive and give price a chance to run. In Forex, I like the 20 to 50 pip trailing stop loss, and this depends on how large that swing is. So if my 2 times target is 100 pips, what I'd like to do is lock in about 75 pips and let it trail the extra 25, and then see if a trailing stop loss can take my overall profit beyond 100 pips, right? If 100 pips is my 2 times target, and I can end up with a trailing stop loss locking me in at 105, 110, 115, 120, all I had to do was move my stop to a trailing stop, eliminate all my risk, and then let my profits run. And you'll be surprised. You do this, you get in the habit of doing this. Every now and then you're gonna get what should be 100 pips you would close, ends up being 130, 40, 50 pips of actual profit. And that is why we use trailing stop losses. If we're talking cryptocurrencies, I like the 10 to 20% trailing stop losses, but only after seeing extremely overbought conditions, right? Like we had back in 2017 when Bitcoin went from 3,000 to 20,000, or in 2020 and 21 when it went from 10K to 60 plus $1,000. I want extremely irrational overbought conditions before I start looking to trap and protect my profits. And then that 10 to 15 to 20% trailing stop loss will work great in cryptocurrencies. So as I mentioned before, let's talk about some pros and cons of swing trading. All right, let's start with the pros. Swing trading is smoother and less volatile than day trading and scalping. Okay, you can capture a bulk of the prevailing trend and we can participate lots of times, right? Swing trading is not about one swing. We're talking about the dominant trend, swing after swing after swing after swing. A lot of times, if you're a fan of larger trends, fan of wave cycles, fan of expansions and rallies, we can probably get 3, 4, 5 trades out of a lot of these major swings. Another thing that's great about swing trading is we focus on the charts and we focus on technical analysis, right? We buy low, we sell high, we go after positive reward to risk surpluses. So we don't have to be digging through the news, right? We don't have to find out everything and know everything about the fundamentals of an underlying stock. If the prevailing trend is bullish, if we see higher lows and higher highs, chances are we have opportunities to be a swing trader in a bullish trend. And swing trading isn't all rainbows and butterflies. We have pre-market, we have post-market, we have weekend gaps sometimes in stocks and Forex. These can spoil our trading plans. Again, this is why I utilize stop losses with chart alarms. Take profits with chart alarms. I just want to know where price is at. I can go back and check it on my charts. But if you put in that explicit stop, if you put in that take profit, sometimes those weekend gaps can disrupt our actual trade levels. Another potential drawback for swing trading is if we're on the lower time frames and we're going with the prevailing trend, sometimes we might miss the larger move, right? This might be a massive trend in the making and we're going after these little tiny swings. And what happens if our swing isn't filled? What happens if you're in the habit of going after 50% pullbacks or the golden ratio, the 618 retracement, and price doesn't fill your order? You miss the dip, right? It's too shallow. Well, we have to compromise. We can find other ways to enter, but sometimes swing traders can miss out on those really large runs. So keep your eye on the prize and focus on the larger trends and have those larger targets in mind. So I'll share another little secret, okay? I'll call this little swing trader's compromise. What I'm looking to do is trade multiple entries, right? Let's say I have my swing. I take small entries at the 38%, small entry at the 5.0, small entry at the 618. And again, I have my 2-to-1 reward to risk on the overall position. But when I am achieving that profit from trade 1, 2, and 3, I can take profit on trade 1 and let trades 2 and 3 continue to run. And so a lot of times this is what happens. You take the swing trades because you're looking at multiple entries. All of those have the same invalidation area. And then when profit is achieved, we're looking at trailing stop losses. Take trade 1 off and let trade 2 go to break even or better, and let that one go with a trailing stop loss. Once trade 2, you want to lock it in. Move trade 3 into profit, move it to a trailing stop loss. And so we have this staggering tier out profit where you can kind of satisfy the need to, I'm taking a swing trade, I'm going after positive reward to risk, and I'm letting my profits run. And those are the type of trades where you'll have trade 1 be a 2-to-1. Trade 3 is a, let's say, 3-to-1. Trade 4, use a trailing stop loss and just let it go indefinitely. And sometimes those trades can be massive. We might see 5, 6, 7, 10-to-1 by just utilizing a trailing stop loss. Again, let your profits run. And whether you realize this or not, letting your profits run is going to be one of the most helpful differentiators to help you be a successful and profitable trader. In fact, I would say that is profitable trading 101. Cut your losers off quickly, let your profits run. I understand that it's easier said than done. But when you see swing trades happen, you see how that reward to risk and that surplus really means a lot to your bottom line. So here's what I'd like from you. If you want to see some real market examples of swing trading, then leave me a comment in this video, okay? Use this phrase, swing for the fences, right? Type in swing for the fences, and in my next live Pulver Report session, remember, my live sessions are Mondays and Fridays at 9 a.m. Eastern Time. We will review some amazing setups for swing trading. Okay, we've done it in currencies. We're doing it in stocks. We're going to be doing it in cryptocurrencies. And these are the type of trades that when you see them play out from start to finish and you do the math on the reward to risk ratios, it's really simple. It's a great methodology to be profitable without piling on tons of different strategies and having to know everything. You stick to the charts, the technical analysis, you buy low, you sell high, you go after larger reward than risk, and you rinse and repeat, right? Pretty simple, pretty cool, okay? So let's do this. Help me out with the YouTube algorithm and hit that thumbs up button for me, okay? And then leave a comment, swing for the fences, and let's discuss more setups in stocks and Forex and cryptocurrencies, and we'll do it in my next Pulver Report live session, right? So as always, thank you for watching. Subscribe to this channel and click that notification bell so when these videos go live, or when we go live during those Pulver Report sessions, you will know. All right, so you know the deal. See it, protect it, and collect it, everybody. I'll see you soon, and I'll see you in the live sessions. Take care. Talk to you soon.